Should investors still think about investing in cryptocurrencies in 2023 after a difficult year? Welcome to CryptoLink channel. If you love getting news and updates about cryptocurrency, join our community by subscribing to our channel. You can tap the bell icon to never miss our new videos. If you enjoy our channel, kindly like and share it with your friends. January 1st, 2023. Cointelegraph tweeted, "Don't be left behind, get ahead of the game with our guide to crypto investing in 2023. Time in the market is key." Investors in cryptocurrencies and non-fungible tokens, NFT, had a difficult year in 2022. On November 21st, nearly precisely a year after it set its all-time high price of $69,044, Bitcoin struck its annual low. What kind of plans should crypto investors make for 2023 after such a difficult year? First, before investing, you should think about the significant risks in this market. Risks to the macroeconomic conditions. As 2023 approaches, investors need to understand how systemic and macro issues are affecting the cryptocurrency market. An energy crisis brought on by sanctions against Russian energy has resulted from the conflict in Ukraine. The monetary policy reaction to inflation by the U.S. Federal Reserve has continued to disrupt markets. With growing governmental pressure and the expected continuation of minor capitulation into the new year, the cryptocurrency contagion from previous bankruptcies continues to cause market instability. The conflict in Ukraine, inflation, and increasing interest rates. The economic consequences of the conflict in Ukraine have had an effect on the world economy. Russia is one of the world's major energy suppliers, especially for Europe, and the restrictions on Russian energy have caused a crisis in a number of those nations, with prices soaring and supply falling. Government-enacted economic shutdown measures in reaction to the COVID-19 epidemic, together with significant increases in the money supply, have caused inflation to surge in the US, Europe, and other parts of the world. By raising interest rates in an attempt to fight inflation, central banks will exert downward pressure on stock markets and cryptocurrency values throughout 2022. With persistently high interest rate and inflation in 2023, a potential expansion of the war in Ukraine might cause further loss to investors. The cryptocurrency contagion. The cryptocurrency markets are still affected by the ripple effects of Terra's collapse in May. When FTX collapsed in November, Bitcoin reached a brand new cycle low. These important events have sent shockwaves that have not yet subsided. Many businesses have filed for bankruptcy, and while they work to repay their debts, they may sell off their cryptocurrency holdings, which might lead to new sell-offs in the market. As the new year begins, investors should keep this in mind. Regulatory demands. The United States has been getting cryptocurrency legislation for a while. The probability that rules will progress in 2023 has only grown as a result of the spectacular events of 2022. Long-term support for the cryptocurrency industry may come from institutional investment brought on by regulatory certainty. However, centralized exchanges, stablecoins, and protocols would probably go through a disruptive phase first. Market volatility may result from the regulatory examination of a well-known stablecoin like Tether or USD Coin. Minor capitulation. Pressure on Bitcoin miners will rise if prices keep dropping. Since Bitcoin mining requires a lot of capital, it is no longer financially sustainable for these companies to operate. Due to the miners' need to sell Bitcoin to meet expenses, the price of the cryptocurrency is under pressure. Previous bear markets have been defined by minor capitulation, which might indicate the lowest point of the bear period. In addition to these dangers, the cryptocurrency industry frequently offers unexpected opportunities like Terra and FTX. When considering investments, it is wise to take this into account. Smart investment in 2023. No coins or projects are being promoted in this section. It provides a broad plan for wise investing that might reduce risk and prevent losses. Some argue that cash is king. In a bear market, having cash reserves is advantageous since it might be hard to foresee a black swan occurrence. These occasions could offer excellent snipe chances to purchase certain inexpensive cryptocurrencies and NFTs. Put a portion of your wealth into reputable cryptocurrencies. The goal of investing is to preserve capital. Putting money into reputable cryptocurrencies such as Bitcoin and Ether is a wise decision. Blockchains at layers 1 and 2. The next stage in investing in risky assets, excluding Ethereum and Bitcoin, is to investigate layer 1 and layer 2 blockchains. It could be good to disperse exposure among blockchains that have at least withstood one down market before considering new blockchains that appear to have potential. The layer 1 Solana, Cardano, Polkadot, Avalanche, and Aptos are a few that need attention. Immutable, Polygon, and Arbitrum are some examples of layer 2. Do your homework and consider the advantages and disadvantages of each project before considering an investment choice. Examine roadmaps, read white papers, and look around the community. A layer 1 or layer 2 blockchain investment often has a smaller risk than one in an application. For instance, investing in Ethereum carries less risk than investing in Uniswap, an Ethereum-based decentralized finance platform. This is due to Ethereum's decentralized app selection, which contains hundreds of applications, and its price stability. Investors in the app will, however, lose their investments if Uniswap is unsuccessful. This is not a criticism of Uniswap, rather, it is a general observation about risk management. It's a good idea to have a backup investment choice for each primary option when selecting layer 1 and layer 2 blockchains. For instance, someone who is optimistic on Solana would wish to hedge their bets by making a modest investment in Aptos, the supposedly Solana killer. To put it simply, Aptos is to Solana as Solana was to Ethereum in the loop before. The development of a strong and well-balanced portfolio will be aided by such shadow investments. Choose the wise choice. Although this generalization doesn't always hold true, with the correct amount of research, it can. Watching the investments made by venture capital funds such as Sequoia Capital, 16Z, Coinbase Ventures, Solana Ventures, and others is fascinating. Their portfolios are a great place to start and narrow down to a few potential investment prospects, even though they don't always make the correct decisions. However, when the cryptocurrency market has fallen and rebounded in anticipation of the following bull run, investing in new firms that are application-tier ventures is often wiser. Earning millions in the cryptocurrency industry requires no special sauce. Buy low and sell high should serve as the basic strategy. Since market prices are low, 2023 is not a terrible year to start. In addition, staying in the market for a longer period of time is preferable to timing your entry. Investor profits will be higher the longer they remain in the market and the more frequently they abide by the regulations. Cryptocurrency and NFT markets are often linear despite volatility and market cycles, and a careful investing plan should help in producing profits. That's it for our today's video. So, what can you say about the news? Let us know about it in the comments section down below. Thanks for tuning in to CryptoLink. We are always excited to provide you with news and updates about cryptocurrency, and if you like this video, please click the like button. See you on the next one.